recently read Clear Thinking by Shane Parrish, and one key takeaway that I read about was, success comes down to positioning, when it comes to not only an investor, but in life and kind of many things. So when we proper position ourselves, it allows us to master our circumstances. And so a question I have for you is, what does that mean for you for investing? And how do you position yourself to take advantage of the right opportunities? What is proper positioning as it relates to gold and commodities?
Okay, it's interesting because, I think one of the biggest lessons I learned in investing was in 2002, when going back to Rosenberg, he saw the economic situation unfolding. And I was pounding the table. Gold was at $350 an ounce and no one was paying attention. The US dollar, I saw it going into a bear market. And we kept on buying and buying and buying the equities and no one was paying attention. And so going back to positioning, sometimes opportunities come along that are so low risk, so high reward, but nobody's paying attention because everyone's looking the other way. And so when I see opportunities like that, that's when I actually really roll up my sleeves and start doing interviews like this, because this is a time when people need to listen to somebody who has the experience and the knowledge and I guess the track record of navigating through those periods. The positioning right now is key. Most people have been buying the dips for the last 2 years and they're down significantly. And most people are in the financial stocks because they think that's the place where you have to be. And yet, as I said, you start looking at some of these financial stocks. And in Canada, for example, the average Canadian bank stock is down 30%. The average person doesn't know that. So right now, more than ever before, I think positioning is very, very, very important. And again, what I provide to my clients is a portion of their portfolio. And it's an insurance policy. You don't want to sit there and run out and get house insurance or fire insurance the day after your house burns down. And I'm not a doomsdayer by any shape or form. I'm just saying that there's a lot of risks out there. Now we've just added the risk scale with what's happening in the Middle East. But you already had the Ukraine, you had the Middle East, you have the financial risks, you have the autocracies versus democracies. And if you're concerned about your US dollar exposure, US assets, you should be positioning yourself with a precious metal portfolio as a portion of your net worth to protect yourself. It's just smart business, smart investing.
Absolutely. And this actually kind of reminds me of, Warren Buffett, when he positioned himself, to take advantage of the dot-com crash, he was willing to look like a fool in the short term to win in the long term. So he positioned himself, right? So then no matter what, he won, right? So it makes me think of, right now, if we think of gold and commodities, it's unloved, right? No one loves it.
Totally.
It's hated. There's a lot of individuals that say, oh yeah, this is just another story, a hopeful story that gold will thrive and do well and perform. But it's the best time to be investing because no one loves it, right? To be that contrarian.
Well, let me just touch on, no one in the Western world loves it. I'm going to remind you that gold right now is $2,000 an ounce. It's been in this range now for over a year. It's one of the best performing asset classes out there. Last year, bonds were down 18%. Equities were down 18%. It's the gold equities that have come off significantly, and in some cases, rightly so, because they haven't performed. Other companies have done extremely well. But the Western world and the Eastern central banks understand gold. So it's in the Western world, they don't see it's not even on the radar. No one even talks about it. And so it is performing, it's doing its rightful job. And go back in time, simple question. If you took $100 in 2000 and had it in US dollars, you took $100 and bought gold in 2000, what's the purchasing power of those two instruments in comparison to each other? Your $100 purchasing power from 2000 is probably what, $30 now? $100 of purchasing power on gold when it was at 300, gold's at 2000. So it's served its purpose. But entering the world where we are right now with the financial risks we see coming forward and the geopolitical instability and the autocracies versus democracies, I just ask you a simple question. If you feel comfortable moving forward, of these not being a risk to your portfolio, then continue on with your investment strategy. But if you're concerned about these moving forward, gold and gold equities has to be part of your portfolio.